All right, I think we're recording here. My name is Alex Grimness. I'm the president here at Premier Credit Consulting, and we're excited to be with you today. I'm with the fantastic Jeff Loveland over at OneTrust Home Loans. Jeff, how you doing?
I'm doing great. Thanks, Alex.
Good, man. We're excited to have you with us. The topic of today's video is really straightforward, and it's really kind of specific for a certain buyer who's trying to bridge the gap between a 680 and a 720 or a 740. And you know, a lot of people kind of get lost in that specific target. And you know, if you're able to actually build up your credit and get over that hump, it could have huge impacts for you as you're getting ready to credit qualify for a home. So really the first question I have for you, Jeff, is, you know, why should a borrower work to get above a 720 or 740?
Sure. Well, specifically for like my side of the industry, the mortgage side, you see huge financial gains from doing that. So you see a reduction in interest rate is like the biggest thing that you would see. But beyond that, and what people don't really realize is mortgage insurance. So the insurance you have placed on your loan if you don't put 20% down, no matter which option you take, whether it's monthly or upfront prepaid, you see huge reductions hitting those different thresholds. So 700 to 720 to 740, you know, there's benefit every single one of those things. So, you know, doing your due diligence on your credit can equate to thousands of dollars of savings over the course of you having that loan.
Yeah, that's huge. And we want to help more people get there. You know, that's one thing that I've always respected about your guys' process over there at OneTrust is it's not just about getting somebody into a loan. It's about educating the buyer through the process so they're getting the best possible product, the best possible terms. You know, I was having a conversation with somebody there in your office yesterday, and it's just, it sounds like it's more of a culture thing there to really help more of your clients have a good, you know, kind of an educational experience when going through the home buying process. Is that fair to say?
Yeah, absolutely. I mean, it helped us all sleep better at night because we feel like we're doing our job and having good ethics and morals. But also, you know, selfishly, they're going to refer us. And if we're doing a good job for them, they feel like they're well taken care of and not just shoved into a different loan that they don't know anything about and they don't feel like they were well taken care of throughout the process. So,
well, this is a big part of that. And we want to give you guys tips on what to do. So if you're struggling to get over that 720 or 740 mark, there are a couple of things that go overlooked in the process of trying to get over that kind of fence there. One thing that I see all the time is the mismanagement of inquiries. It's so easy to kind of misunderstand how these can negatively impact your credit. And Jeff, I think you'd agree there are kind of two camps of thought here. There are the people who they say, don't pull my credit because it's going to kill my credit score. And they just don't understand how that works.
Right.
And then you've got the other people who say, oh, I'm so excited to buy a house and I'm going to shop not only interest rates on mortgages, but, oh, I went to RC Willey yesterday and I found a couch and you know, I just got a raise. I want to go buy a new car. And, you know, you've got these two different types of buyers and neither one of them sometimes really understand what happens if you either have excessive inquiries or if you don't shop a mortgage, right?
Right.
And so if we start with that first type of buyer, you know, this is somebody who, you know, I don't see a whole lot, but I'm assuming you do, where they come in, they say, hey, my Credit Karma or my whatever credit score is a 780. I'm ready to go. You say, great, I need an application. They say, no, I don't want my credit pulled, right?
Right.
It's going to hurt my credit. Well, one thing that's overlooked a lot is that, you know, yes, inquiries can have a big impact on your credit score, but if you're shopping for a mortgage, if you keep your inquiries within that category, so you're within mortgages, you can shop for that mortgage per the Fair Credit Reporting Act for up to 30 days. You know, the CFPB says 45 days. And so that one inquiry should only negatively impact your credit score a couple points. And really could potentially shop a mortgage a couple times, but that's one of the most important reasons to start with a mortgage professional that you trust so that you're not out there just going to website after website after website, you know, putting in applications or really not even knowing where you're at, trusting a credit score that could be wildly different than what you actually pull. Is that fair to say, Jeff?
Oh, absolutely. Yeah. And I mean, that goes full circle. If, let's say you're buying your house, you're most likely working with or going to work with a real estate agent. So I highly recommend you ask your real estate agent who they trust in the industry as far as mortgage goes, because you can, like you said, you can call and call and call and check with different people, but you want to make sure, number one, you're getting a fair deal, but you also want to make sure that you're getting a education throughout the process. Most people, I mean, I would say 95% of people are only going to buy a home or refinance a home a handful of times in their life. So, and our industry changes, I feel like monthly, but you want to make sure that that professional is walking you through those steps. And so, yeah, that's absolutely fair to say, because you will see a discrepancy usually between your consumer credit score that you're seeing on your phone or when you checked 6 months ago. So you want to get with your mortgage professional and say, well, here's what we're seeing. This is what we're going to underwrite off of, and make sure that that aligns with their expectations and goals as far as getting into a home and getting into a payment that they like.
Yeah. And so if you're one of those clients who are concerned about having your credit pulled, know that one of the best things you can do is start with a trusted mortgage professional, because they're gonna protect you from making some of those big mistakes that these other types of buyers do, where if you're shopping for a mortgage and a car loan and a credit card and a RC Willey installment loan or any of those things, having multiple inquiries in multiple different categories could negatively impact your credit score by up to 10%, which could be an 80-point plus swing and in the wrong direction for you. So if you're on that cusp of really trying to get above that 720 or 740 and you aggressively start looking for credit, it's going to have kind of the reverse impact for you. It's going to drop you down even further. So work with a trusted mortgage professional. So that's one thing that I see that's overlooked quite a bit. Another thing that I see that's overlooked quite a bit is the utilization and management of credit cards. You hear a lot of different kind of voodoo theories on credit cards. It's one of my favorite things about being in this industry. I was in Grand Junction, Colorado, doing a class yesterday for 20 some odd real estate agents. And it's my favorite thing to listen to how people tell their clients what to do with their credit cards, because some of it is outrageous. Let me tell you the easiest thing that you can do. Don't spend more than 30% of the available credit limit within 6 months of going into a home purchase. So if you know you're going to buy a house, it's not keep your credit card balances down. Just don't spend more than 30%. And if these are for those clients trying to get from 680 to 740, and if you're really trying to push the limit, keep a small balance in the single percentile range. So, if you've got $1,000 credit limit, if you keep a $5 or $10 balance, that's going to help you really maximize your credit score so that you can get over that hump. So do away with kind of the voodoo credit methods. Focus on what works. Don't use more than 30% of your available credit limit, and keep your credit card balances low if you're really trying to push that. Is that good advice, Jeff? Does that work?
Oh, absolutely. That aligns perfectly, which I'm glad to hear that. It aligns perfectly with what I tell clients as far as, what to do as they're buying a home. I mean, I start talking to individuals looking to buy a home, especially their first home, 6, 9, 12 months prior to get into the house, whether it's saving up for a down payment or saving up for closing costs or getting their credit where they want to be. Kind of usually it's all those three collectively. Yeah. But yeah, that aligns perfectly with what I tell them. I keep that low. Now I am interested to hear what you have to say about this. So, cause I get asked this question. Well, we have to do let's say a $300 purchase, right? We had to buy something on the credit card, but I'm getting paid next Friday and I can pay it down. Will that hurt me? If I pay it down to that $50 or $10 limit, but it's only on there for 7 days. Yeah. So I'm interested to hear what you weigh in on that.
Yeah. So for those of you in the real estate or mortgage industry, you've probably had that huge change that was blown up and all these things with trended credit data a little while back, where your credit reports went from like 20 pages to 60. That was a very specific change in the mortgage industry designed to kind of combat that particular problem. Because what happens is there are a lot of people who use credit cards every month and pay them off, but the amount when they pay it off every month, when they pay that statement balance or pay it off in full, that's not what's being reported to the credit bureaus. And so it can skew people's credit scores. And so if you have a big purchase coming up, you put $300 on a $500 credit card, but you can get it back down to $50 in 7 days. The key thing that you need to ask is, when is your statement date and when is the reported date? Because the credit card company should be reporting the statement balance. So the amount paid towards the statement balance, right? But oftentimes that's not the case. So if you're in that situation, you need to find out, when is your statement date and what's the reported date. Both of those things you can get from your credit card company. And that's an easy way to eliminate that fear is, oh man, I just put $300 on this credit card, but I paid it off. What's going to show on my credit report, right? So is that a good answer? Does that?
No, it's perfect. No, I love it. That's perfect, right?
Yeah.
And once again, it all ties back to just being educated about the process, and people fear what they don't know, right? And most people don't know what's going on with their credit. We don't get told near enough about it growing up. So
yeah, I agree. So, if we can focus on inquiries, if we can focus on credit card utilization and management, those are two easy ways to really clear that gap from 680 to 740. But one thing that we also need to talk about as well is derogatory debts. A lot of people that are hovering right there at 680, they think, oh, if I just go pay my collections, it's going to boost my credit score. You have to be really careful with this. It's another good reason why you need to talk to a trusted mortgage professional, because sometimes paying those collections can have a short-term negative impact on your credit score. So if you can put together a game plan with your mortgage professional, and if needed, potentially work with a company like ours as a credit service organization, you can still pay off those accounts and also reach your credit scoring goals without kind of just throwing, money at the problem and keeping your fingers crossed that your credit score doesn't tank, right? So I think that those are three things that get overlooked a lot for people who are right in that range of 680 to 740 is A, don't mismanage your inquiries. B, have better utilization and know the rules of the game with credit cards. And C, be prepared to tackle your collections if needed, but do it with a solid game plan from a trusted mortgage professional. I know that Jeff has worked with a lot of his clients to navigate these situations. In fact, we had a deal come out of your office where, we were able to work on a $10,000 debt, get it negotiated by 50% and have it removed within 5 business days. And it not only gave the client a clear to close, but it was a dramatic game changer for their credit score, right? So, if you have a good game plan with a mortgage professional, it's a lot easier to execute. But is there anything else that you'd want to add to that, Jeff?
I would just say start having that conversation, right? Especially if you're looking to get into a home or build or whatever the case may be in the next, I would even say 12 months. Pick up the phone or reach out, call your real estate agent and ask who they like to use. Feel free to call myself, even call yourself, right? Call Alex and start reaching out and educate yourself what you can do to get into the best financial situation when that time comes. I can tell you 9 times out of 10 times that people get put into a sticky situation in their mortgage, whether they can't qualify or the rate's higher than what they anticipated. It's because we get a call and they're under contract and they haven't looked at their credit at all, right? They haven't shown bank statements. They don't know what they can qualify for. So pick up the phone, email, text, whatever, and get a hold of one of us and start that conversation, because you're going to have a much better idea of what you can do, and you're going to have a much better experience across the board, right? It's kind of like driving across country. If you don't know, if you have some general direction, it's going to make for a much better trip than if you just start driving, right? If you're in Oregon and you just start driving west, it's going to be great until you hit the ocean, then you're done, right? So
yeah. I feel you. That's a good example. I know that in my experience with buying homes and in my experience of working in this industry, there's probably a handful of people who really have a good understanding of how to make it a positive experience. And Jeff's been one of those people consistently who has really made sure that his clients know what they're getting into. It's a positive experience, which makes a world of difference, especially if you're one of these clients that could be saving thousands of dollars on your mortgage and your mortgage insurance and your interest rate because you're at a 740 compared to a 680. right? Again, that's all part of the experience. So Jeff, I can't thank you enough, man. You're so great to work with. Thanks for doing these videos with me. Do you have any final kind of parting advice to really help clients just have an awesome experience when trying to buy a home?
You know, the big thing, you've covered so much of it, and I appreciate being invited to be on this video, actually. But I would say, guys, just communicate, find out where you're at, look at if you're looking at your consumer credit score, so your stuff online that you check regularly, check the content. Make sure that there aren't derogatory and incorrect and inaccurate items on there. You know, make sure that you're not seeing a fraudulent credit card show up, or a judgment, or things that shouldn't be on there. Those are super, super important things that Alex can help you guys get off. So I would say just monitor it, right? You don't want to just play the victim when time comes to buy a house and you didn't know what was going on. You know, you have to help yourself in these situations. So
that's fantastic advice. I'm going to get that kind of posted right out front of our new building. You know, just, you can help yourself, just check your credit, right? Something along those lines. Jeff, you're the absolute best, man. Thank you so much for doing this. I'm going to make sure that Jeff's information is posted. This video will also be posted on our free resources tab on our website. It has tons of good information for you. But Jeff's information will be there as well. But Jeff, good luck today. Congrats on everything that you got going on, and I'm sure I'll talk to you soon.
Hey, thanks, Alex. See ya.
Thanks, man.